Imagine a stock that's lighting up the charts right now, flashing signals that could mean big gains for savvy investors, especially in the booming world of AI. KLA Corporation, KLAC, has been named the IBD Stock of the Day, and it's grabbing attention for all the right reasons. But here's where it gets controversial. Is this the perfect buy signal amid skyrocketing AI demand, or are we setting ourselves up for a classic market trap? Let's dive in and unpack this exciting development, breaking it down step by step so even newcomers to investing can follow along easily. First off, KLA, KLAC, is trading at $1,175.60, up $18.42 or 1.59% today. That's not just a random bump, it's backed by a solid 42% IBD Stock analysis rating, which evaluates stocks on key metrics like earnings growth and relative strength. The stock is currently rebounding from its 50-day and 10-week moving averages, a technical indicator that often signals renewed momentum. For beginners, moving averages are like trend lines on a graph. They smooth out price data over time to show whether a stock is generally going up, down, or sideways. When a stock bounces off these lines, it can suggest buyers are stepping in to push prices higher. KLAC is also forming what analysts call an emerging base, which is essentially a pattern where the stock consolidates after a run-up, building a foundation for the next leg up. Interestingly, this emerging base is actionable right now from the 50-day and 10-week lines, meaning investors could potentially enter positions today. However, and this is the part most people miss, experts note that the full emerging base won't be confirmed until later next week. It's a bit like waiting for a cake to finish baking. Jumping in too early might lead to singed fingers if the pattern doesn't hold. The stock's composite rating stands at an impressive 96 out of 99, reflecting top-tier fundamentals across earnings, sales, and more. Its industry group ranking is 14 out of 197, showing it's outperforming most in the semiconductor equipment sector, crucial for AI tech. The emerging pattern is classified as a pullback, which happens when a stock retreats after breaking out, often back to support levels like the 50-day line. To illustrate, think of a runner sprinting ahead but then pausing to catch their breath before accelerating again. That's a pullback in action, and it can be a buying opportunity if the overall trend remains bullish. Now, for some related buzz that's heating up the market, major tech giants are gearing up for earnings season, with Apple leading the charge among hyperscalers like Meta, Alphabet, and Microsoft. Apple shares recently broke out of a cup with handle base pattern, a classic chart formation resembling a teacup with a handle on the right side, signaling a potential upward move. For those new to this, a cup with handle base forms when a stock rises, flattens into a cup shape, dips slightly for the handle, and then breaks out. It's like a stock taking a breather before resuming its climb, and Apple's recent breakout ahead of its earnings report has investors excited. Meta, Alphabet, Microsoft, and Apple are all poised to report, and their performance could ripple through the entire AI ecosystem, including companies like KLA that supply the tools powering these innovations. But let's stir the pot a little. Some investors might argue that chasing AI hype is overdone, leading to bubbles that burst. Is KLA truly a safe bet in this frenzy, or could it be another overhyped tech stock ready for a reality check? What do you think? Does the AI demand justify the buy signal, or is this emerging base more illusion than opportunity? Share your thoughts in the comments below. I'd love to hear agreements, disagreements, or your own takes on navigating these market waters.